Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar, and we're back, baby. Omni Camp is done. You guys that came to Omni Camp, the A-Team as they dubbed themselves, bravo, guys. Well done, you guys. I don't know if I ever seen 5 guys take the technical analysis the way these guys ate this stuff up. We spent 4 solid days and nights together, these guys in my presence, and boy, oh boy, I have to say, guys, one more round of applause for you. You really impressed me. That was 5 Omniacs that were leaps and bounds ahead of almost any Omniac I have met so far. So up yours, guys, on that. Traders, tonight's video is being filmed on December 7th for trading December 8th, 2010. It's video number 663, baby. But this video is a bit different. This video is a two-fisted video. It is for trading tomorrow on Wednesday, and tomorrow we have a swing day because swing days are all over the U.S. indice charts, traders, all over them. Before I get into that, though, of course, you need to know that futures trading is very risky and can cause substantial financial loss if you don't know what you're doing. So traders, make sure that you got risk capital to play this game and that you put your stops in first. And if you don't have risk capital, get out of here because you shouldn't be playing the commodities markets. For you traders, though, that don't mind taking on a little risk, and you know what I'm talking about when I say that, we got a lot going on. The two-fisted video is for trading tomorrow. We have a swing day, and we have to sell that swing day because we are compelled to trade the swing day because a swing day are taken. They have specific rules, and you take them when you see them every time, and 8 out of 10 times you're going to get a score on that swing day. Tonight's swing day in the S&P, NASDAQ, Transportation Average, Dow Jones Industrial Average, you name it, the Russell, looks a lot like that. What you are supposed to do with a swing day is basically sell it right about the day before's highs and expect a drop at least to the day before's lows. Traders, tonight in the NASDAQ, we sold it right there in the NASDAQ at the high of the day. We sold the S&P right there at the high of the day because of that swing setup. The S&P's got 6 or 7 points in it already. The NASDAQ's got at least 10 points in it. Using that simple technique. Now, I'm not telling you to stay short tomorrow all day. A swing day is something that we get in, it drops, we get out, and we get out of the market's way because this is a bull market that we're in, and a swing day is a one-day downward formation, and in many cases, it doesn't even last the entire day. So that's what Fist 1, or Part 1 of this video, is going to be about. Fist 2, or Part 2, is a long-term view on bonds, because I am here to say to you right now that the bond market has topped. The top in bonds is set in stone, as it says on the board. My last video, I told you bonds were going lower. We did a class live and said, if you see 129, you get short, because that's the top, and bonds are cracking from this point forward. We've traded down to 123 and change since then. Now I want to show these charts to the rest of the world instead of just my site, and I want you to see what I'm talking about. Traders, 2 things are going to happen right now. Wasting no time, I want to get right into our chart segment for trading tomorrow, but stay tuned because immediately following that, I am going to show you something that should really open up your eyes. I'm going to show you that via the use of technical analysis and simple techniques that have nothing to do with opinion, Omni was able to call the all-time high in early 2007 for 1577 to be the high. Omni called that, the market hit 1576 and cracked. Omni then called for 688, which revised to 668. The market cracked all the way to 666. It missed the top by 1 point. It missed the bottom by 2. After that, Omni called this year for S&P to trade 1290, 1300. February this year, I made that call. Traders, we were trading somewhere near 900 this year. Calling for 1290 is insane, right? Well, we are almost there. We hit 1235 so far. Imagine that. So the call for 1577 was off by $1. The call for 668 was off by $2. The call for 1290. The year is not over. We've already traded up to 1235. Now I understand there's some out there in this commodities trading zone that is using my projections. And by the name, by the way, you know who you are. He takes my projection and claims it's his own since around April. And you know what, dude? Do your own homework. Don't take my projection and call it your own. You guys, if you're trading with him, you want to know where that projection came from? Right here from the Omni Trading Academy. It's been on my board every video since the day we made the projection. On the way down, I assure you, there was no one out there calling for 1280 or 1290 or 1300 but me that I seen. So please, do your own projections or send your people to me where they'll actually learn how to do something instead of steal it from somebody else. All right, enough of that. Just thought I'd pull you out on that one. Enough of that, traders. What I want to show you now are some really interesting charts for tomorrow's trading. Short we're going to be. Very quick down move, then we get out. After that, the segment will be all about the top in bonds. That's set in stone because the bonds are heading lower. With no further ado, let's go look at some charts. Okay, traders, Dow Jones Transportation Average, the leader of U.S. indices, puts in what we call a swing day. And as we know, a swing day gets sold. If it's a downward swing day, you sell it, no questions asked, no indicators need to be looked at. It is a standalone one-day trade that speaks for itself. The last swing day on this chart is the one right here, traders, and it absolutely gave us a downdraft the very next day. It worked quite well. And if you go through this chart, you'll find most swing days do the very same thing. Another one here. There is a swing day right now, right here in this box, which means the market should come off at least for the first part of the day. Again, we're in a bull market, so I am not bearish here. I'm taking advantage of a swing day. Traders, when you see a swing day, if you are a technical analyst that trades what he sees, you are compelled to trade it every time you see it. That's what keeps the consistency on the winning side of the swing day. It comes with losses from time to time. You take a swing day and you sell a swing day every time you see one, the odds are good that 8 out of 10 times you will be correct if you did that. Traders, that would be the swing day in the transportation average, but we're not going to stop there. There is a swing day in the Dow Jones Industrial Average right there. You can see it clearly, and you got that top here, which can turn out to be a double top. So certainly we're selling it on Wednesday. Then NASDAQ, clearly swing day. Market should break a little bit. Swing day is all over the charts, traders. Last but not least, look at this S&P. Not only does it have a swing day, look at all the action. Look at all the resistance up here. That, most likely, that swing day should produce a downdraft to at least the day before yesterday's low and probably a little lower. Once again, I'm not bearish S&P overall. I'm bearish for the swing day trade. Now, traders, do not go away because this next segment I think you will find quite interesting. So, traders, you've seen those charts, right? Now, I want you to take a little journey with me. I want you to take a journey down our chart road, charts that we've used for the last 3 years, charts that tell us if a major market is topping or bottoming. These charts should be eye-openers for you. They should show you that the top of the bonds are in. And with no further ado, take a look at this chart segment. Okay, traders, as I mentioned, we were going to start to talk about the bond market. The bond market's analysis, in order for you to understand what I'm looking at and see it for what it is, because it's no opinion of mine whatsoever, it is hardcore analysis. Look at the chart before your eyes. Traders, back in 2007, for any of you fans who have been following my videos long before we ever got near the highs in the S&P, Omni called for a high of 1577. Looking at this chart, we went to 1576 and started to crack. After that, Omni did a long-term projection of 688, and it actually lowered it to 668, but for now we'll call it 688. The market bottomed at 666 and started to take off. Since then, Omni has made a call for 1290. We've hit 1235. That's all wonderful. Well, I am not here to toot my own horn. It doesn't even matter if I can make these calls. Point is, analysis works really well. Watch these next series of charts. I think you are going to get the point. This is going to center around the bond market. In our last video, I clearly stated bonds are heading lower. I think the top is in, and now I am here to show you why. This is a longer term view. This has nothing to do with a day trader's position or just tomorrow. This is out for the next few months. Follow me on this, traders. Okay, traders, you see this chart before you. While the S&P was beginning to top, I put this chart out in front of everybody and I said, look, it is a big head and shoulders with the big V top, and it looks to me like it's topping out. But of course, that's not the only reason. I want you to see how this chart began to get constructed and how the top gets called. So there's your head and shoulders. The yellow lines represent sort of a V top. Watch the next slide. Okay, traders, now you are looking at that same formation, but what tops out a market is when you have a broad head and shoulders. Let's say it starts in July and it goes all the way out to December of the same year, like this one does. Big, broad head and shoulders. You'll recognize the three blue circles are an upright head and shoulders. When you're topping out in a market, you get a big, broad head and shoulders top with that V-looking top, and you get multiple head and shoulders within the head and shoulders itself. So what I'm trying to show you is this. The left shoulder, this blue circle, it's got an inverted head and shoulders in it. Then the head, the big blue circle, it has an upright head and shoulders, which morphs into a second upright head and shoulders. And then if you look at the right shoulder, it's got a series of head and shoulders, one upright, one inverted. The big crack comes. So I look at that, I realize there's a big head and shoulders, I realize there's lots of little ones inside. I know it's going to look like a top, so I get my topping technique and I snap it. It's a tool. And I snap it on top of the chart. And what do I get? This picture. A perfectly rounded top with a huge symmetrical head and shoulders with multiple head and shoulders inside that entire head and shoulders. That is a top, my friends. That is how tops are called. I called it live on video months before it happened, and I worked with all my traders and did video after video proving that that top was in. So lo and behold, it does turn out to be a top, and Omni happens to call the high within $1. So that's how I did it, and it doesn't look very difficult, this technique I'm showing you. Big head and shoulders, multiple head and shoulders inside the big one, then the big arc technique that shows you it's a rounded top, plus you got that V-looking top up there. The top is in. I was able to call it. What happened next? The market goes all the way down to 666, so that's how you call a top. Look at this next chart. Traders, you're looking at the bond chart right now. This is the very same chart that I told you about 2 weeks ago. I did a class in my Omni Trading Academy, and I did videos and basically said, if you see 129 in bonds, the top is in, go short. We should go down to 114 and eventually 104. Look at the chart before your eyes. Big, broad head and shoulders. Starts in July, goes all the way out to December, just like the S&P did. Then it's got multiple head and shoulders inside the head and shoulders. If you'll humor me here, look at that little left shoulder off to the left there. It's got an inverted head and shoulders, an upright head and shoulders, and an inverted head and shoulders in the left shoulder. Then you look at the head. It's got 3 blue circles inside the head, actually 4. The first 3 is an inverted head and shoulders. Then if you look at the 4th little circle within the head here up at the top, it actually is part of an upright head and shoulders. Then inside of those blue circles are multiple smaller head and shoulders. Then we fall down from that and we create a right shoulder with multiple head and shoulders in it. Traders, that is the exact same formation that I was able to see and call the top in the S&P. I am telling you the top and bonds are in. Watch the next slide. Now look, we snap our arcing topping technique tool on top of this chart, and we realize it's symmetrically round. It's a rounded top, big head and shoulders, multiple head and shoulders inside the head and shoulders with that V look with those dotted yellow lines. That, my friends, is a top. That is how I called the top in the S&P. That is what the top is in bonds. And if that doesn't assure you that it's a top, follow me into this next chart. Traders, look at that chart before your eyes. The same technique, right? See how it breaks down? That looks like the S&P, doesn't it? You know what that technique is? It's the technique that I put on top of the dollar chart, and the dollar fell apart with that exact same formation. Looks like the S&P, right? Look at the chart closer. That is the dollar. The projection we got off of that was 78 even, as you can see on the chart. The low was 78.33. The analysis called that top perfectly, just like it called the top in S&P, and it is calling for the top in bonds. Next chart. The bottom you can call using the same technique. Traders, in a trade show live before it happened and on YouTube video, Omni calls the bottom for 688 because of this broad bottom, head and shoulders, inverted head and shoulders, multiple head and shoulders inside of the head and the shoulders, the V bottom, and if you snap that arc tool on it, it's a rounded bottom. I called bottom March 6th of 2009. Omni was absolutely right about that same technique. Next chart. Here we are again, traders, the bond chart. It has topped. That is the same exact look that that dollar index just had, that the S&P had at the top, and the S&P had at the bottom. My friends, I am here to tell you the bonds are done. This picture should convince you that bonds have topped. Please rewind this and watch these frames over and over again, because you will see that is a top, and if not, it will be the first time in my career that this many techniques culminated together calling a top, and it didn't actually work. Now, you witnessed Omni call the top before it ever got there at 1577 in S&P. You witnessed Omni call the bottom below 688 before anybody called it, and it worked. Omni has recently called, or this year, in February of this year, Omni called for 1290 in the S&P. Everyone thought I was out of my mind, and in fact, I thought Omni was crazy too, to be honest with you. And we traded as high as 1235 today. Omni has not been wrong with any of these major calls. I assure you we'll end up hitting 1290 before this month is over. How could Omni be wrong at this point? When it made the call, we were on our way down back in February. So the Omni has made all these long-term projections almost to the penny in the S&P. And the dollar, as I just showed you, again, staring at this chart before your eyes, that is the same exact topping technique. Bonds should now go to 114, and if that's broken, 104. And traders, if bonds are bearish, the stock market has no choice but to go higher. All of what you have seen recently is just more and more strength coming into the stock market. I am not saying the world is saved. I am a technical trader. Technically, that's a top in bonds, making the S&P not going to break down. Maybe it will tomorrow, because we are already short at the highs, because tomorrow there's a swing day, and a swing day is a one-day formation to the downside. But overall, I am quite bullish in the S&P overall in the intermediate to near term. Tomorrow, of course, we're already short. We expect it to go down. This is your long-term view on bonds. If bonds stay within this pattern and break like the S&P did and the dollar did, using the same technique, the S&P now will have no choice as bonds break but to move higher. The bonds breaking down will assure the world that the Fed feels comfortable that we are recovering, and that technique tells me that the bonds have topped. I really hope that this helps you, traders. Again, rewind this segment of this video and look at these charts. I am doing this 29 years. I am no new kid on the block. That technique has worked for me every time in the past. Bonds have topped. You heard it here first. So, traders, you've seen the charts and you've seen that major call for the top, right? Then the major call for the bottom. Then that call on the dollar chart, which looked just like the S&P chart, and now the call in bonds, which looked like the dollar, which looked like the S&P, which looked like they've topped to me. Traders, rewind that segment, look at those charts. This is not something new. This has been happening for years. This is how you call tops and bottoms. I hope this video helps you stay focused for tomorrow's swing day, and more than that, for the future of what's to come. If bonds have topped, and I have called that they have, and if you were around for the 129 print, you'd have been short all the way up there. If bonds have topped, the S&P cannot have another break right now. The S&P has to move higher over time if the bonds are moving lower. Let's see what happens. Of course, it all involves the U.S. dollar. We need dollars to go down right now to keep our stock market buoyed, but That's getting into the fundamentals. We are technical traders. We take the charts only. We trade what we see, not what we think, not what we hope for. We trade what we see. We are technical analysts. All right, traders. So that's the plan for tomorrow. Come on down to my site. It's www.livewithoscar.com, and you can see where we're going to play the S&P and the NASDAQ tonight. And, of course, don't forget, we're only looking for a bit of a downdraft to get out of its way because the likelihood is the buyers are going to come back in this week, if not tomorrow. All right, traders, that's S&P. You know my long-term view in bonds. The top in bonds is set in stones. Bonds are heading lower. They may have some up days on their way, but rest assured, you get major rallies, you sell into them because you're going to see 114 and possibly 104 before this thing is done. All right, traders, I hope you like what's in these videos. I hope these videos are helping you. I hope you come on down to my site. Remember, don't trade alone. Come on down to my site. Jump into my chat room where there are thousands, well, at this point, there are hundreds of traders, thousands of Omniacs, but in the rooms, hundreds of traders that are there helping each other get through this rough and tumble market every day. I'm at the helm of it all. I will be there to help you. Traders, make sure you come on down and see me. All right, so that's Tuesday night. Remember, 2-part video. One's for tomorrow, short-term trade, get in, get out. The next part of the video was for the bonds. I like what I see. I believe in that trade. I believe in that call. I believed in the top in the S&P. I believed in the bottom. I believed in the top in dollars, all called the same way. I believe that that is the top in bonds now. Traders, do your own homework. See what you come up with. I'll see you at the site. And remember, as always, keep your emotions out of trading. One of the best things you can do to help yourself with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Always remember, futures trading is risky and can absolutely result in substantial financial loss. Traders, trading futures is not for everybody. It's not suitable for every trading account. And as always, past performance is not indicative of future results.